Imagine waking up and seeing your life savings swing 4% in a single day, up, then down, then back again. For most people, that's a nightmare. But for investors right now, that's just Monday. Volatility has taken over the stock market like a storm you can't escape. Bonds? Crashing. Tech? Tumbling. Energy? All over the place. There is no safe haven. And in this chaos, only 2 sectors in the S&P 500 are green on the year. The rest? Deep in the red. But here's the twist. Out of this mess, 3 stocks are holding steady, and could deliver massive returns when the dust settles. Hey everyone, welcome back to the channel. I'm Ernest MBA and CA, not a financial advisor, but someone who spends every day diving into markets, trends, and investment opportunities that could actually matter to your portfolio. Today, we're talking about chaos, opportunity, and 3 specific growth stocks that I believe have the power to not only survive but thrive in the middle of this financial storm. Let's set the scene. Every sector in the S&P 500 was negative until just a few days ago. Consumer staples are up 3.7%. Utilities? Barely holding at 0.8%. Tariffs are in the headlines again, on, off, on again. Markets are yo-yoing like never before. The VIX, Wall Street's fear gauge, is hovering around 40 and has touched above 50. That's panic mode. The Nasdaq had its second best day ever, followed by giving back nearly all of those gains the next day. There is nowhere to hide. Not in bonds. Not in equities. Not even in so-called safe sectors. This is a market where earnings season could either destroy what's left of investor confidence or provide a glimmer of hope. So where do you look for strength? Where do you find companies that still have pricing power, demand, and room to grow in a slowing economy? That's exactly what we're going to unpack today. These 3 stocks aren't speculative flyers. They're grounded in long-term growth, and they might just be your best shot at upside in a brutal market. Number 1. CrowdStrike, CRWD. First up, CrowdStrike, ticker CRWD. In a world of growing cyber threats, this company is mission critical. And here's the thing about cybersecurity. Companies can't cut it, even during a recession. It's a non-negotiable expense. CrowdStrike is the leader in endpoint protection. They're the best of breed. Their business model? Subscription-based, which means consistent annual recurring revenue. Gross margins? 80%. That's phenomenal. ARR continues to grow. They're not just surviving, they're thriving. Over the last year, CrowdStrike is up nearly 20%, with another 10% gain this year so far. While the S&P has been battered, this stock is holding strong. Their EBITDA last year? Nearly $1 billion. And with strong revenue guidance, they're positioned to outperform. Buy zone? I'd start nibbling around $340, but if it gets near $300, I'd go in heavier. It's a fortress stock in a turbulent market. Number 2. Scalar. Next up, Scalar, ticker ZS. Another cybersecurity gem, but with a different angle. They focus on zero-trust cloud security, a huge growth area. Scalar is smaller than CrowdStrike with a $31 billion market cap, but the growth story is powerful. Year to date, it's matching CrowdStrike at 10% gains. Analysts are noticing. Cantor Fitzgerald just upgraded the stock with a price target of $250. That's 26% upside from here. This company is expected to grow revenue by over 20% annually for the next 3 years. Again, we're seeing strong gross margins, subscription-based revenue, and recession-resilient demand. Buy zone? $165 for a light buy, and $150 is where I go in heavier. Quick pause. If you're enjoying this research and analysis, hit that like button and subscribe to the channel. It helps us reach more investors like you and keeps the content coming. Number 3. AMD, Advanced Micro Devices. And finally, we pivot to semiconductors with AMD, ticker AMD. This one's a bit more volatile, more risk involved, but the upside? Enormous. AMD has been beaten down 45% over the past year and more than 20% in 2025 so far. But AI spending is not slowing. CapEx from hyperscalers is ramping up. And AMD's products are right in the thick of it. Back in 2017, AMD generated $300 million in EBITDA. Fast forward to last year? $5.1 billion. And they've improved EBITDA margins from just 6.3% in 2017 to nearly 20% today. Buy zone? Anything under $80 is an absolute steal in my opinion. Current levels are already attractive, but sub $80 is where I would be buying in bulk. So what do we have here? CrowdStrike, high-margin cybersecurity leader scaler. Cloud-native zero-trust powerhouse AMD. Beaten down semiconductor giant with huge upside on AI growth in a market driven by chaos, tariffs, inflation, geopolitics. You need companies that have pricing power, sticky revenue, and a future-proof business model. These 3 stocks offer that in spades. Now, I want to hear from you. Which of these 3 stocks are you most bullish on right now? If you could only pick one, which would it be? Drop a comment down below. If you're serious about investing, join our Discord community, Online Finance Academy _77688. We're breaking down opportunities every week. Live with members. Thanks for watching. Stay smart, stay patient, and keep looking for opportunities in the storm. See you next time.